Strong GDP numbers out of the United States drive strong sentiment into Friday's trading, but yet the markets are not doing too much movement back or forth. This is an interesting anomaly. That in the context of earnings season, as Amazon slams, Intel misses, and Starbucks pours out a couple of cups, and commodity currencies continue to rally, as we talked about, ending those into the trading week. Welcome to the MTI Minute. This is Kevin Dixon, Senior Trading Analyst at Market Traders Institute. Earnings are big. Earnings are a little bit scary right now. Intel just flubbed, taking 32 points off the Dow. We can talk all day, but as I always say, let's let those charts do the talking as we head into the spiders. The broader markets here, folks, are prepared and poised to still break all-time highs. Intel ranges the semiconductor complex down very strong, but again, Exxon, Chevron miss. Here we are just a couple of points away from all-time highs, the SPY. Don't be afraid of the noise and the smoke that the markets are putting up right now. Earnings are bringing a couple of things down. This is the diamonds, the Dow Industrial Average. Like I've said, a couple of the last few days, we've had some of the big components dragging us down. Today it's Intel. Yesterday it was 3M, but we're still up on the day. If those things really mattered, would we be up on the day? The answer is no. We're going to take new all-time highs on the diamonds probably within the next 2 weeks. Now here's the Qs. Qs all-time highs yesterday. We ended our conversation the other day with the Qs cracking highs. The Qs cracked highs again yesterday, all-time highs. And today, Amazon's earnings were in line. In line is not exactly moving the wire. In line's within expectations. They're still profitably so. Back into those charts on the Qs, and technology here still yesterday, all-time highs. Today, we've got a very indecisive candlestick. We tried to sell. This market won't even sell halfway really well. You know all-time highs are calling. Now this is the Russell 2000. IWM still strong. I want to see this breaking above 159. Below 159 is where I'm concerned, and I've said that all along. Our basket strength for April's about done, is on XHB. A lot of home builders reported earnings last week. We were hitting targets last week. So hitting targets last week means we were out by this week. And gratefully so. Just like with semiconductors. We hit targets last week and we're out this week, even as Intel drags that sector down. No mistake about it. Crude oil, just to round out our look on the day, crude oil is getting slammed this afternoon. I mean, that's some pretty big hits on there. Now, sure, Exxon, Chevron both didn't hit their earnings as they should. Chevron did beat, but their revenue guidance was off. And that's not even really causing a lot of selling that's going on here. Now, it's been a wonderful week in the market for earnings. I'm going to take you into a few of our views, and we'll talk about a few that have really cracked out very well. Microsoft, it's a $1 trillion company for that flash in the pan that it was yesterday. Microsoft smashes earnings, races to new all-time highs. Now this is significant because Facebook also kicked some good earnings. As you can see, Facebook when we head back into the charts. This is Microsoft here, 130 level yesterday. Facebook also kicked it up really well. A bunch of likes on that. 196, 197, 198. And again, technology is not the leader today. Technology is the laggard. Now Tesla. At this point, Tesla broke our pre-earnings support. That's where the blue line's at, 258 level. It did earnings yesterday, and once again, they couldn't flip a profit. But the stock rallied on hope that they're going to flip a profit. Well, most companies wouldn't do that on hope really so much, but once again, they're looking at not producing cars, not putting cars on the road as actually being a negative. Remember, the new Tesla Model Excuse should be out by next earnings season, and guess what? Don't worry about them delivering cars. They're switching to a model making Matchbox cars, which they can roll off the assembly line a lot faster with artificial intelligence. Back into the charts on Tesla. Now, there's a new player in this field, Stark Industries. Stark Industries goes public on an IPO next week. They make Iron Man costumes to compete with Tesla there. We've got PayPal, old buddy, old pal, breaking new 52-week highs with its earnings yesterday as well. And here is Starbucks. Yeah, they popped earnings and sold off, but now it's rallying back up. Everybody likes a good cup of coffee. Earnings show that as well. Now, check this out. Here's Intel. Intel, an influential bellwether in the semiconductor complex. Birds of a feather flock together. Horton earnings were not so good, so the home builders started to sell. That seasonal play may be done and on pause for right now, but we've already won all our trades that we took there. We've won all of our trades that we took on our semiconductors. And here we are with Intel, the bellwether, going out. Remember what I said? If you can find a stock a few weeks ahead of earnings, you can go make money. Why risk it into the earnings event, which is widely unpredictable? It's like rate statements in the currency market. If you're sitting on profits, why risk it? All right, let's go back into those charts once again, and we'll view the last one I've got for you there, which was Intel. Now I'm going to take you into commodity currencies. We've got commodities loading up. And no bigger basket moving today than the NZD. The NZD has been a pretty wickety-whack basket. We've had ups and downs all week. But one of the things that you'll notice here when you start to notice a few things here or there is that we actually rolled into what we could call ourselves working with a nice double bottom. Remember, double tops, double bottoms, what they are. You can sit there and draw lines around them if you want to. I've got all sorts of lines. I'm just going to do a quick freehand drawing here. Looks like a W. It doesn't have to be the exacting pattern. That's all it has to say. You're looking at a double bottom there. It's in a range. This is a 2-hour chart. We're looking for a breakout. 66.60 is floating around and below 67 cents. New Zealand dollar, though, the commodity currencies are your strongest basket on the day. The New Zealand dollar, the Australian dollar, New Zealand dollar rallies against the yen. Once again, I'm telling you, it's easy to spot. All you got to do is take a look and you find those double tops and those double bottoms. You draw a trend line there to recognize what you're looking for. I'll do another freehand drawing here just to show you. Yet again, double bottoms look like W's. We're looking for a breakout north off those lows. A lot of times this will coincide with a counter trend line break as well. The New Zealand dollar trades strong to the pound, which is broken down to the below $90.94 level here on the day on a 15-minute time frame. The New Zealand dollar is traded strong against a weak euro, which is broken down to almost $1.67. This has been a pretty strong up and down week, really. We've had some pretty wild price swings. The last 2 days, though, you've watched a couple of hundred pippalulas fall loose there on the euro versus a strong New Zealand dollar. Now, New Zealand CAD, you've got a weak Canadian dollar. New Zealand dollar is strong against this, only 40 pips movement on the day. But the story is clear. New Zealand dollar, Swiss franc, also moving well, 36 pips there. So the New Zealand dollar strength fueled by fundies during the Asian session. Now, I'm going to tell you a little bit more real quickly about the Australian markets also moving in sympathy. There's going to be some similar strength pattern along those. The Australian dollar is going to be rallying against Japanese yen. Here's the Aussie yen, as you can see. Nice move up off that low, 30 pipalulas on the day. Here's the Aussie versus US dollar. This is a smaller time frame as I was looking at doing scalping on the day into Friday. And that's what you do because we've been selling here for a few. This is just a short covering rally. The Aussie also rallies against the euro. And the euro's down the last 2 days on that. Now, before we head into the weekend, I want to give you some food for thought. And this is going to be a pretty serious comment for you here as I head into the yen. Now, of course, we know the yen, the dollar yen, the pound yen, some of our favorite trades out there. And the yen is getting ready to go into a Bank of Japan really is going to be closed for a week as we're going into the Golden Week. Golden Week is just like earlier in January. The Japanese banks are going to be closed for an entire week. Now think about this, because Bank of Japan creates a lot of liquidity. It's putting up a warning that there's things going on around us out there. And what we have to watch out for is the flash crash in January. You know what I'm talking about. Look at this chart as we head back into the guppy. I'm talking about what happened right over here, January 2nd. So 594 pip move out of nowhere. That's going to be a stop seeker. It's going to be taking out anything that would be hanging out around there. So in order to avoid potential pitfalls, Awanda, Forex.com have sent out a couple of warnings increasing margin requirements. Now remember, this takes a lot of liquidity out of the Asian session since the Bank of Japan, the Japanese yen is a reserve currency. So be warned about trading any yen and holding them over the weekend. You could see some additional expenses. The actual spreads could be a lot wider to make a market happen. So basically, you're going to be needing to watch out for what's going on with yen. Now, if you're somebody that's trading a monthly time frame or a weekly time frame, you don't care. A week is just a week in time. But if you're a smaller time frame trader, if you're a swing trader, let me give you a very sharp and stern warning, because we don't want to get caught looking and all of a sudden higher spreads, 30, 40 pips appear out of nowhere, or even like with that 500 pip flash crash, the spreads open up so wide that you may have had a 30 pip stop and you could lose 70 pips in that environment. So be warned. It's a great holiday if you're in Japan. You're going to have a blast because there's a lot going on. But for us in the United States, for other people around the world trading markets with Japanese yen, a word of warning. Now, thanks again for all those likes and shares. We've got some really funny comments out there. I like having a good time. You like having a good time. But we like winning as much as anything else. So let's make sure that we all remain focused on the objective here, which is to make winning trades happen. I'm in it to win on the MTI Minute. This is Kevin Dixon. Thanks again for tuning in, and we will see you next time.